What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is your Sunday Motivator, and we're going to talk about what to expect and what to watch out for this upcoming week in the stock market. But we'll get into that here in a second. What I need you to do right now is hit that like, share, and subscribe, and I need you to come along with us on the journey. Inside the description is all the links to the social media and everything covered in this video. Now, if that sounds good and you want to be part of a journey with a community of like-minded investors, man, all you got to do is follow me and let's go to war. Traders War Room wants to remind the viewer that all content on this channel are for education and entertainment purposes only. You are responsible for every move you make in the stock market. Have fun, tread cautiously, but definitely go to war and let's get it. All right, team, this is the segment I like to call the Buzz Report. We're going to talk about what's hot and what's not in the stock market. Let's get it. All right, team, here's the upcoming IPOs. Now, there might be some more that are coming out, but these are the ones scheduled. Now, listen, you guys know how I play IPOs. I don't like to get in at the very first day because it's too volatile, man. It could spike up and it come crashing right down, man. All you got to do is kind of look at Robinhood. Now, there was a great money opportunity in some of those IPOs, but again, extremely volatile. So definitely, if you decide to hop in, go in with caution. But take a look at the tickers, do some DD. If you can see the future of the company, then it might get you interested, and I would definitely pay attention to it and then see what a good entry point would be once it kind of settles down and the waters are a little calmer. So your top headliners, we're doing market watch for our headliners. Here's another sign that the bull market is near a peak, and this one bears watching. So listen, I want to hit on this real quick, and I got the article here. We're going to go over it here shortly, but there's a thing called a melting point, right? And so what some theories think that you'll see a very quick upsweep in the market, you know, like everything's booming, everything's rocking. It's a bull market. It's a bull market, man. People are hopping in, and it'll spike up very quickly, and then all of a sudden it'll just tank. And you know, that's where we talk about a crash, the market correction, so on and so forth. So keep your eye out looking for this. There's always a bull market somewhere in the marketplace. You just need to find it, but definitely be very cautious when getting in deep on certain holdings, especially in speculative stocks. And the second one, if your employer fires you because you won't get a COVID vaccination, don't expect to collect unemployment. Now, this one's huge. Now, I don't know how much this is going to go. This could probably get into some legal terms and things of that nature, but, you know, we'll have to watch this and pay attention to this. Definitely the COVID variant has people on high alert, and you're starting to see some stocks spike because of uprisings in COVID cases and vaccines and so on and so forth. So definitely it's on our radar, but we got to have more information. We need to follow this story. So definitely pay attention to it and keep some of those COVID tickers on your watch list so that you can see opportunities to get in on dips and ride them up for good profit. Now, so like I told you, we're going to dig into that story a little bit, right, about the market, you know, hopping up and everything. And so what this article talks about is that it's nearing top according to leading indicator that's based on the trailing 3-month returns of the S&P sectors. Over the 3 months prior to the past bull market, a fairly predictable pattern emerged on what sectors performed best and which fared worse. Currently, a ranking of the sector's relevant strength lines up fairly close with this pattern. Now, I want to hit on this real quick, okay? The market's unpredictable, right? We know this, but we do know that patterns emerge from specific ways that people invest, okay? And because we know that patterns emerge, that is the basis for technical analysis, okay? If no patterns and it was just completely random, TA wouldn't work. But we know that TA works because there's predictable patterns where people buy and sell in certain sectors and so on and so forth. So definitely got to pay attention to it. I'm going to put the rest of the article on here. Pause, read the whole article. You definitely need to get yourself aware on this information, and you need to do some research and follow it, okay? So according to this research by Ned Davis, utilities, energy, and financials are the S&P 500 sectors that perform the worst on average in the final 3 months of a bull market since 1970. And it's clear, you can look at the chart and you can see the pattern. Now, in contrast, according to this guy, Ned, who's doing all the research, Consumer staples, healthcare, and consumer discretionaries have performed the best on average over 3 months prior to the past bull market on top. Now, what does that mean? Okay, so we know after bull markets, we know that there's a pattern that shows 3 sectors that perform terrible, and then we know that there's 3 sectors that perform good. So this kind of clues you in, getting you an idea of possibly some trends that might be emerging within the stock market, and to fall into some of these where you might see a rotation of money. Big advocate on follow the big money. Okay, so if you see a lot of whales going into certain sectors and things of this nature, you want to pay attention to that, because these guys that have the big monies, they get the info first, they pay for all the services, they kind of have an idea to save their money, and so you want to follow where the big guys are putting their money. Okay, and he wants to say that, these indicators, they're not guaranteed to work. But the last time he called this, it worked out just like he said a month later. And we went from a bull market right into a bear market. So this guy seems to know his stuff. Definitely, we need to pay attention to it. Definitely need to watch it. But obviously, everything is still unpredictable. So you can't take this as like gospel. Okay, you got to do your own research, you got to make your own decisions, you got to follow your own gut and what your DD tells you the best places to put your money in. All right, team, and we got another big week of earnings. And man, if you paid attention to this week, what did a lot of the earnings do? And the last week, what did a lot of earnings do? Okay, it ran up, and then one day, sometimes 2 days before reporting earnings, the thing tanked. So take that in consideration, okay? Not everything is going to plan out the way it should be. Like, you would think that a company kills earnings and their projected growth and all this stuff for the future is banging, right? And the stock just continues to go up. That's not the case, okay? People are being bearish, people are profit taking, people are being very cautious with money. So take that in consideration, and you need to make sure you get these. If you're putting in calls, man, get it at the lowest price possible. And if you're putting in puts, make sure you're in at the top and writing it down, okay? Pay attention to the patterns and the candlesticks. But let's look at some charts and see what we got. All right, and we can thank Earnings Whisperer for giving us the most anticipated earnings release for August 9th. And I'm looking at this, and already off top, Monday, AMC, it's going to be nuts, right? Tuesday, we got Fubo, we got Casper, we got Unity, McAfee, a few other ones. Wednesday's another big day, okay? You got Wix, you got NIO, you got eBay, Blink, EVgo, Root. Thursday, we're looking at PLTR, Wish, Rocket, Airbnb, Jivo, and then Friday, not too many tickers on there. So we're really looking at Monday, kicking it off hard. Tuesday, got some interest. Wednesday, another big day. Thursday, a big day, and then tapering off on the Friday. So definitely take that into consideration when getting into your positions this week if you're playing earnings. All right, so let's kick it off with AMC, man. They report on Monday, and look what they did for the past week and some change, okay? It's been on a sell-off, all right? We're seeing on the 29th, it had a high of 40.25, hit a low of 28.57. We already knew that we were going to dip below the $30 range because of the trend, and we saw some good support at that 28.57, and then hit a nice bump up, closing off the week strong with some decent volume. So my impression of this, I like AMC going into this week. I think we're going to see some volume, and I think it's going to be nuts, but it's going to be highly volatile, so we definitely have to pay attention. But I wouldn't be surprised if we see this closing above $36 by the end of the week. All right, next we're going to talk about Fubo. Okay, we see that it had a high of 28.45 on the 29th, hit a low of 24.81, and then sparked back up, hitting close to $27, sitting at $25.95 now. I'm noticing that the volume kind of tapered off towards the end of the week. So what I think on this one, I think has a little bit more to go down early in the week. And then I think depending on how earnings are, it'll either go up or go down depending on their outlook. I'm not thinking that their earnings are going to be anything spectacular, but the potential of future growth is what I think investors are really going to key in on this one. So definitely got an eye on Fubo, but I believe that it's probably going to go down moving into earnings. And then depending on what earnings are, you'll see it either skyrocket back up heading towards $28 or continue down. And we've seen it close to the $20 range. So definitely a possibility, but definitely headed down to 24.81 if the earnings reported in the future potential aren't stellar. All right, eBay, man. I think eBay is going to crush it, dude. eBay's low. You see 74.13 over there on the 28th, and we're sitting here at like $65, man. I think eBay is going to crush it. I think it got nowhere to go but up. So this would be one of those plays that Monday I'm probably going to be looking for a good call to get in, and I'm going to see what it does at opening bell. I'm going to also pay attention in pre-market tomorrow morning, see how the trend's going, but I'm looking at the volume. The volume's starting to pick up, as you see, going from the 28th on into the 7th. It's starting to pick up, and I like what I'm seeing right here. So eBay, I'm bullish on this moving into Monday. All right, another popular one that everyone seems to like, NIO, okay? We see NIO was down 39.79, and then we had some uptick on an EV news sector, and we saw a high of 46.78. But look, I want you guys to pay attention to that volume, okay? Even though it's been tinkering at above that $43 range, looking at that volume, man, that volume's tapering off, okay? So depending if there's some sort of catalyst that comes out on EV news or things like that, I could see NIO skyrocketing out the bell and then quickly, sharply declining. So my advice on NIO is to be very cautious, and if you're going to get in quick and plan to get out very quick as well. All right, another one I think is going to surprise some people, Wix, okay? Now, Wix.com, listen, Wix.com has tons of resources with people making domains and making websites and things of that nature. And there's a whole bunch of entrepreneurs, especially on the digital platform, that made websites on or in the process of making websites and things of that nature. I want you to see it was at a high 309 and it dropped all the way down to 265, right? But look at that volume, okay? That volume on 722, nothing, right? And as it was coming up into the end of this week, the volume kept increasing, okay? I like Wix going into this week for earnings, and this one would be another one. Buy the rumor, sell the news. I would not hold this through earnings because typically these have not been doing well, but I would not be surprised a run up going into earnings, a sell off, and then it skyrockets out the gate. Now, a stock I want to put on you guys' radar, Rocket, man. Listen, if you hadn't noticed, I've been seeing a lot more ads on Rocket. Okay, they're putting a lot of money behind market and advertising, all right? And I'm liking what I'm seeing with the chart. You see that spike up at 1865, and then it come down, okay? And it came down to 1694. Look at that uptrend, okay? I'm liking what I'm seeing. The volume isn't there yet, but I like the pattern of what I'm seeing. I like what I'm hearing on the news. I like what I'm seeing with the advertisements. I'm liking the testimonies from people that have used this, okay? I think Rocket's going to do fairly well. I wouldn't be surprised if this runs out the gate. This would definitely be a good potential for a call going into Monday. All right, and finishing it off, man, we're going to talk about Disney. Man, I'm a Disney fan. I'm a Disney lifer. I think this is going to be a killer in the future, okay? I see a 250 price target, by the end of this year, if not in the first quarter of next year. So I'm definitely a fan of Disney, but it's had some struggles. COVID has definitely put a damper on its plans and things of that nature, but I like the level where it's at right now. I think it has strong support and it has decent volume, and I like Disney to go up, but I would not be surprised if this sinks down a little bit based on some COVID related news and having to deal with restrictions from opening up and things of that nature. So this is definitely on my radar list for either up or down movement, and hopefully I can make money on the way up and on the way down. So definitely keep Disney on your radar. All right, on our new segment, Traders War Room, we got the stock of the week, and the stock of this week we're going to talk about is Upstart, the stock of the week, man. I'm liking what I'm seeing in this chart. You see the low of 120. 139.20, the high of 139.53. Moving into the end of the week, the volume's there. I like the way the chart's going. I think Upstarts are going to do fairly well moving into earnings. I think it's going to be a typical. It's going to spike up, and then right before earnings, it's going to spike down. And then depending on how earnings and the sentiment and the future growth potential, which I think are all going to be positive, it's going to take off from there. So this is our stock of the week. We're going to pay attention to this one, and we're going to make sure we hit this one heavy. So check the description out. There's going to be a link to the Upstart company so you can do your own DD and get spun up if you don't know what Upstart's about. So stock of the week right here. Let's get it. All right, and since I didn't get to do my Friday video, man, we're going to do the questions from the Frontline today, okay? We got a question from the Discord. I'm going to try to answer the best I can, but while it may be a particular stock, man, listen to the information, take it for what it is, and you can probably apply the principles and the information within this to any of the stocks that interest you. So let's go see what our question is. All right, and our question from the Frontline comes from Ronald61 off the Discord. I'm looking to open a position to square. What's a good entry point, my man? I watch your videos. Thanks. Ronald, I'm going to answer this question, but I want you guys to understand that the type of pattern that I'm using to answer this question can be used on any stock, okay? So pick your favorite stocks, apply it to the stock, and see if you see what I'm seeing and what I'm talking about, okay? So let's dig into it. Just remember, this one's going to be over square, but it can work with any other stock that you can identify a pattern with. All right, first things first, anytime you're looking to get into a long position or you're trying to see a trend of a stock, man, you got to blow it up, okay? You got to get it from a bird's eye view. So we go out extremely far away and we look at the stock, okay, and we notice that it's had a huge uptrend, and then recently it's been kind of trading up and down, moving into making newer highs and higher lows and things of that nature, okay? So in order to identify our next point of target, man, we got to come in a little bit closer, but we got to look at the history and see what we're looking at as far as where it's come from up until now. All right, and now looking at the stock this way, okay, I go into what I call a rectangular pattern, all right? Now, good thing about rectangular patterns, they show an accumulation of wealth essentially within a given period and levels high and low, okay? And we can see that we got two rectangular patterns forming, all right? We got the one on the bottom one from the last breakout, and it's kind of traded, and then it spiked up to the second top pattern at the orange lines, okay? And it's been trading inside there for a while. Now here coming up recently to recent times within the stock, we haven't gone back into that bottom portion except very briefly, but that's a rejection, and it's gone nothing but up into the topper part of the rectangle. So we've even broke the top part, which is that new high area, and so now this makes me think, okay, we have to come back down, we have to test inside the top level of the orange, so we have to test that level first, and if we can hold, then it's skyward from there, okay? So let's see what I think our test area is, and then if it can meet and hold that, it'll be onwards and upwards from here. All right, and so doing my calculations and things of that nature, I think that square is going to test that 264 area, all right? Now, it holds that 264 area, bounces around there for a little bit, a few days, you know, maybe a week or so, and does fairly well and holds it, then it's going to go up from there, and it's going to make new highs. But if it can't hold that level, man, if it can't hold that level, then it's going back down to that bottom level, which is that 236 area. So now bringing it a little bit closer, we're looking at the pattern from the last spike and to the second spike. So we see the last spike, we got up there at 279, right? And then it came down all the way to 265 before it spiked back up, okay? And now we hit that 289.23 area, right? And now we're coming back down to that 275.10. So we have to hold this level here. In my opinion, I think that we got a little bit more pressure to come back down to, and I wouldn't be surprised if we come down past the 265.48, and if we can hold between that level, and you know, give or take a little bit, man, the 270, you know, 265 area, somewhere in there, it's going to test that level, and if it holds, it's onward and upward from here, and I think that we see it go up past 289.23. So if I was a betting man and I was looking to accumulate and get into shares, I would wait right now for shares long, and I would wait for it to come back down to a little bit further level. Now, doing some quick calculations, so that we can find our levels of our high price target and our low price target depending on the way the stock moves. We look at the math. So let's go ahead and crunch some numbers from the first jump to the downward spike before the second jump, and then from the second jump peak down to where it's at currently. Let's see what we got. All right, so rough estimate of where my lines are at on the thing. The first square jump from top to bottom, the difference is $14.21. All right, rough estimate again. The second jump, the difference from the top to where it's at currently, $12.61. So in my opinion, I think that we have a few more dollars to go downward till we hit that $14 to $15 difference before we see another spike up. So what I think is going to happen short term is I believe we're going to see the stock take a little bit of a dip and go down to the 268 area, right? If it can't hold that, then we're going to hit down to the 261 area, 41. And I believe, 261.44. And I believe that we're going to see some good volume from there, and it's onward and upward as long as we don't see a huge sell-off and negative PR comes out regarding this stock. Now the upside potential, like we saw, was that $14. So we're looking pretty much from a $290 stock, we're looking at a $14 increase upwards to create that new peak of the rectangular formation I was talking about. So we're looking at roughly, and now I'm just overestimating a little bit just to be careful, of $315 upward for a next top peak price target. And at that level, that would start us on the new upward part of the rectangular pattern, where now the bottom rectangular pattern with the orange red down there, that would go away, and we'd have the new orange blue that you see there. That'd be our new bottom level rectangular pattern, and we'd have a new beginning of a top level rectangular pattern for the new way that it would be moving over the period of the next few months. So, hey, that's just my opinion. That's how I look at it. But if I was looking to accumulate shares, I would look to accumulate a small opening position at below $270, and I would dollar cost average into any weakness, because I do believe Square will be a force to be reckoned with, and I do see a price target of $315 or more long term. But definitely, you don't want to get in long shares at a huge position where it's at currently, because it's definitely a little bit higher on the RSI and it's approaching that overbought period. Okay, so we need the RSI to come down a little bit. We'd like it to be in a little bit better range, around the 50, maybe 40, so that we're hitting into the oversold, or there's still more room to grow. But I do see a little downside potential before we go upside. So take it for what you will. You can put this type of pattern out there on any type of stock, man. You just got to do the work. You got to find the pattern, and you got to find the differences. And I like to use 3 points, man. The stock has to hit the same point 3 separate times in order for me to put a line on it. Okay, that's kind of the way I like to go with my things. If it hasn't hit that 3 times, then it's just maybe a fluke, or it hit that huge one spike, man. That doesn't mean nothing to me. I want it to hit the same area 3 or more times for me to see that it has a good potential to hold that level or jump from there onto the next. So hopefully you got something out of this. Let me know in the comments, and don't forget to like, share, and subscribe this, man. Put this with any other stock out there, and make sure you do your DD and look up Rectangular Patterns TA. All right, guys, that's the video, man. I hope you guys are excited. I hope you got something out of here, man. We went over a lot of stocks, a lot of charts, a lot of TA, a lot of technical stuff, man. That's the boring stuff when it comes with the stocks, man. Everybody can make money, and that's exciting, and they can read news and things of that nature and talk stocks and things like that. But you got to get into the charts. You got to look to see what the stock's done, what it's doing currently, and potentially where it's going to go, man. You got to do that homework. Okay, that's the DD that you guys have to do. Now, Traders War Room, we look at the stock market like it's a war zone, right? The stocks and the sectors, those are our battles, and we do it together as a team and a community, man. I promise you guys, if you guys rock with us, man, we're attacking, destroying, and conquering the stock market, and everybody's along for the ride, man. Everybody's going to eat. Everyone's learning. Everyone's growing together. If that sounds good, I need you to come along with us on this journey. And as always, if you're ready, follow me, and let's go to war together, team.